Hello and welcome to myfinanceteacher.org. In this video, we're going to have a look at the general stock market, we're going to have a look at energy, crude oil, and we're going to have a look at MJ, which is a very interesting ETF that I like to follow. If you like my analysis, you'll soon be able to join us at myfinanceteacher.org, perhaps in a couple of weeks, as soon as I resolve some of the PayPal issues I'm having right now. So jumping back into the charts, S&P 500 over here, over the last day or two, S&P is coming down a little bit from the resistance of retesting this all-time high. And I think there will perhaps be another push higher to break a little bit above that all-time high. That will perhaps happen over the next couple of weeks. But before that, over the next few days, I think there is a good chance that S&P 500 continues to come down a little bit to retest that 20-day moving average, the middle of the Bollinger bands. And if this drop continues a little bit deeper, perhaps even to retest the 50-day moving average over the next week or nearly a couple of weeks, then perhaps we'll hear something dovish from the upcoming FOMC meeting. Remember, in the middle of this month, we'll have FOMC meeting coming up. If the markets are coming down into that meeting, perhaps the statements will be dovish, pushing the S&P 500 back to that resistance zone of the previous all-time highs, and perhaps breaking that resistance for a short while before S&P actually drops into perhaps the upcoming short-term daily cycle low. Usually these daily cycles on the general stock market last anywhere between like 1.5 to 3 months. So the ongoing cycle being 20 days long, 20 days old right now, I don't think is going to give us a huge move up in S&P 500, even if S&P breaks to new all-time highs, because perhaps by then the cycle will already be a little bit old, perhaps nearing its midpoint. And after that, over the next several weeks, perhaps into late June, early July, I would expect some sort of a cool down into the end of this ongoing short-term daily cycle. Looking down at RSI, if S&P continues down over the next few days and then gives us a new all-time high, what will happen on RSI is that it's going to perhaps slide down a little bit and move up with a new all-time high. But what's also likely to happen with all of this more or less horizontal movement over the last few weeks and perhaps over the next 1 or 2 weeks is that the new high on RSI perhaps is going to be lower than the previous high, giving us some sort of a negative divergence where the S&P would be giving you higher highs and RSI would be giving you somewhat over lower high since mid-April. Usually a negative divergence is not a good sign. And actually, if you zoom out a little bit, by then, which would be perhaps late June, early July, the ongoing intermediate cycle in the S&P 500 will already be quite old at over 150 days long. And usually these cycles last for around half a year on average. So that would generally be around the time for us to see some sort of a negative divergence on RSI. Next, let's have a look at the Optimism Index on S&P 500. And the picture here is not really amazing. The optimism on the general stock market has been far above redlining. It's been quite hot on the general stock markets over the last several months. And a few weeks ago, people did get somewhat scared. And after that, the enthusiasm over the last few days is coming back to that red line. We don't see this optimism index above the red line yet. So as I mentioned, I think there is a chance for the general stock markets to give us one more push higher, to push the optimism index a little bit higher into 70s before going down into the intermediate cycle low perhaps over the next couple of months. Similarly on Nasdaq, I think over the next few days Nasdaq might retest breaking above these 50 and the 200-day moving averages before pushing higher again for one last attempt at the recent all-time highs, since they are pretty close to the ongoing prices, I think it will be kind of magnetic for Nasdaq to try to push for that resistance zone again. And additionally, we haven't seen pokes above the Bollinger Bands yet. And often I do see those pokes before some sort of a turnaround and a cool-off period. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. Next, moving on to crude oil, as we've discussed with the members at myfinancesteacher.org. Quite a while ago, there was a pretty good chance that the crude oil finished its intermediate cycle over there. That's near the end of March. Although that cycle was a little bit shorter than usual. Usually those cycles last for around half a year. That previous cycle lasted for 142 days. That's why I was a little bit uncertain if that was the intermediate cycle low. But of course, with the strength in crude oil and in energy in general, we see that a rally into the new intermediate cycle is confirmed. So for now, we are enjoying quite nice gains in XLE. We'll have a look at XLE in just a moment. But what's happening right now with crude oil is it's been testing this resistance zone. That's anywhere between 67 and 68 for a couple of weeks, and now it's deep into that resistance zone, which means I think that it's going to break above the resistance zone. The intermediate cycle is only 70 days old, so there is still quite a while to go, perhaps another month to go until we reach the midpoint of the cycle, when crude oil will probably give us some sort of a peak. And additionally, crude oil recently did correct down into the 50-day moving average, which has given it more strength to push again towards that resistance zone and finally break above that resistance. So once we confirm breaking above that resistance, perhaps sometime this week, perhaps over the next 1 or 2 days, the next thing we'll have to watch out for is the next resistance zone. And the next resistance zone, if you zoom out a little bit, we've already passed these resistance zones. Looking at the weekly chart right now, the next resistance zone would be formed from these mid to late 2018 highs. That is anywhere between 75 to 77. Let's go back to the daily chart. So perhaps a confirmation of the breakout, a bit of a retest. Often breakouts above relatively strong resistance zones are retested before the rally continues, and as we mentioned, that resistance zone is somewhere around 75 to 76. Let's place it anywhere there. How long will that take is anybody's guess, but perhaps by then we'll see that the cycle is actually coming to its midpoint, and that will probably be close to the top for the ongoing intermediate cycle in crude oil. As I mentioned, all the way since that previous intermediate cycle low, we are enjoying relatively nice gains on XLE. And to be honest, I'm actually considering maybe I should increase the allocation to XLE a little bit more, although our allocation to energy is already quite high. After all, the Bollinger Bands have narrowed a little bit, meaning that poking above those Bollinger Bands is not really a reversal sign. Instead, narrow Bollinger Bands often indicate a strong move coming either to the upside or to the downside. In this case, it looks like the strong move is going to come to the upside, and perhaps you see some sort of a flag over here on XLE, which is probably going to be broken over the next couple of days. And if you just copy this flagpole higher above that breakout zone, then your measured target would be somewhere around $62. And again, if you zoom out a little bit on the weekly chart, similar to crude oil, that would come close to those resistance zones from previous highs, in this case from late 2019 to early 2020 highs. That's actually somewhere around $61 to $62. Wouldn't that be nice? That's when I will probably take down a lot of the positions, go mostly into cash in the energy related portfolio, and together with the members at myfinancesteacher.org we'll be waiting for a correction in energy. Next, let's have a look at the Optimism Index in crude oil. We see that usually Optimism Index comes all the way down to the green line at intermediate cycle lows. But with the opening up trade, as the economy is opening up after the pandemic, energy hasn't been allowed to drop below 40 or even below mid 40s at the most recent intermediate cycle low. And currently the optimism index is not even close to the red line, so we still have a little bit further to go to see overly optimistic, overly euphoric levels on energy. That's perhaps going to happen when we'll see crude oil reaching the next resistance zone, as we've seen somewhere around $75. So the optimism index is still showing some potential for further rally. And lastly, let's have a look at MJ. I really like to follow MJ, although sometimes I don't have enough time to keep track of every chart. And it looks like MJ usually follows cycles which last for around 3 months. Just under 3 months. If you look at the cycles over the last several years, it looks like the average has been around 88 days, but MJ is really quite volatile. Both in terms of vertical moves, the price swings are really significant, and in horizontal moves, the cycles are a little bit more difficult to track than those for precious metals, for example. As you see here, in early 2020, we saw a cycle lasting for only a couple of months, whereas mid-2020 saw the MJ cycle lasting for 4 months, then another cycle lasting for just over 3 months in late 2020. The previous cycle on MJ lasted for just over a couple of months. And more recently, MJ has just been kind of trending downwards. And I'm in a bit of a dilemma over here. Perhaps the cycle in MJ finished over here, giving us a cycle that lasted for 69 days. Otherwise, we are still in an ongoing cycle which is already now 88 days long, which is actually the average so far. So it's quite normal to continue down over here to give us slightly longer than usual cycle lasting for, let's say, just over 90 days, close to 100 days. So I'm a little bit uncertain over here. I'm leaning a little bit more towards a new cycle that started over here in the middle of May. I would say that there is probably 55% chance that we're in a new cycle, which means we're not going to see a new low over the next few days. Instead, perhaps after a bit of a correction, we'll see MJ continue higher. But as I mentioned, I'm a little bit uncertain here because everything is just flattening out. So there's still quite a high risk of perhaps around 45% chance that MJ is not done dropping and the cycle low is still upcoming, perhaps over the next 1 or 2 weeks. What's interesting is that Bollinger Bands are narrowing quite a lot, and as I mentioned, narrow Bollinger Bands, although not always but often, indicate that a strong move is coming, either a strong move really down or a strong move up. So that's quite interesting over here. And looking at the optimism index on MJ, you see that the optimism index is all over the place, jumping from the green line to the red line in just a few days. So I like to look at this 20-day moving average of this optimism index. And once this 20-day moving average is close to the green line, that is a good signal that we've seen a cycle low. Back a few weeks ago, this 20-day moving average of the optimism index, it did drop below 40. It was in mid-30s, which again tells you that, well, perhaps MJ has given us a cycle low already. But since this 20-day moving average, again, didn't come that close to this dotted green line at the bottom, when nobody actually wants this asset and when the cycle low actually takes place, that again indicates that there is still some risk over here. But I'm considering actually to get at least a starting small position on MJ, perhaps relatively soon. So for an update on that position and other updates, consider joining us at myfinancesteacher.org. As I mentioned, for now, PayPal isn't really working, so for about a week you can get a free membership if you send me your email through this contacts list. That's all for now. Have a nice day and good luck in your trades.